That is part of the good news of the story. The bad news is that much more needs to be done to respond to climate change, both by insurers and the businesses they work with. That's why today's survey report is so important, and that's what it's about. Risk managers at companies play a crucial role in helping businesses understand how their risk exposure may be changing. They can also help insurers create products and services that address those needs. This survey, done in collaboration with Zurich and the Professional International Risk Managers Association, is a perfect example of how insurers can play an active role in helping companies all across the economy in just about every sector, helping those companies understand and manage this fast evolving climate risk issue. The world is changing fast, and the old way of doing things, especially when it comes to emerging business risks, no longer hold. Companies that recognize and get ahead of these changes will, as always, win for themselves, for their shareholders, and for society at large. For those sharing the podium with me, they are in the leading few. Let me now turn to my colleague, Charlene Lurig, our Program Manager of Insurance, to talk about what we found when we did a study of what are risk managers at companies across the economy thinking, doing, and how we can make sure that action proceeds. Thank you very much.
Thank you, Mindy. Thank you to PRMIA and Zurich for working with us on this survey. The purpose of this survey was threefold. First, to learn whether risk managers view their organizations as being exposed to climate risks, risks that are posed both by the physical effects of a changing climate, as well as risks that are driven by human responses to either prevent climate change or react to physical effects. Those include regulatory action to limit greenhouse gas emissions, and it also includes tort claims against large emitters. We also aim to understand how that risk perception was translating into risk management within the organizations surveyed. So in particular, who's responsible for managing the risk? And finally, because insurance is a critical piece of a comprehensive risk management strategy, we aim to understand whether risk managers perceive their present-day coverage to be adequate to address climate risks, and what new types of risk transfer products and services might be useful to them in managing these risks. So in order to answer those questions, we sent an invitation to answer an online survey to members of PRMIA and Zurich's own clients. Within 2 weeks, we received 200 responses. About 50% of those responses came from industries who were more likely to have heard of climate change risks discussed either by legal counsel or trade publications. So that includes heavy emitters from oil and gas industry, manufacturing, cement, other industries like that, and financial or insurance services. Of the remaining 50%, many respondents came from the health or medical field, from agriculture or food and beverage, and also from municipalities, many of whom run utilities that provide public power and also water services to their populations. In terms of revenue breakdown, slightly more than 30% of respondents came from organizations that had more than $1 billion in revenue in 2009. The next highest percentage came from organizations that reported less than $5 million in revenue in 2009. So there was a good diversity both in terms of sectoral representation and revenue size. And what we found was that when we asked those risk managers to select their top 5 risk management concerns from 17 high-profile risks, for more than 30% of respondents, climate regulation posed a top risk concern to them, was actually within the top 5 of the risks that they faced. Of the other 4 out of 5 risk management concerns that they listed, including regulatory environment overall, regulatory liability, energy costs, and natural disaster, those all could somehow be affected by climate change as well. When we asked them about specific types of climate risk, strong majorities considered their organizations to be very likely or somewhat likely to be affected by climate change. Over 70% reported that their business was likely to be affected by competitive risks stemming either from regulatory action or from changing consumer preference or from changes in the physical environment. Around 60% of respondents felt that their organization was likely to encounter regulatory, legal, and physical risks as well. Reputational risks received fairly lower responses, with only about 50% reporting some likelihood of encountering those risks. Now, all of those risks, of course, were most highly perceived by those from industries that face regulation, so oil and gas and other heavy emitters. But it's worth noting that there was significant risk perception for the majority of these risks by all sectors surveyed. And far from being a far-off risk, a majority felt that all of these risks would come to bear in the next 10 years. Most striking was that close to 80% felt that regulatory risk was likely in the next 10 years. 50% felt that regulatory risk was likely to affect their organization in 2 years' time. This near-term perception of regulatory risk and related competitive risks were expressed both by high-emitting industries, which may face immediate costs from climate regulation, and from non-heavy emitters, which presumably expect that regulatory action may pose costs to their business as regulated industry pass through costs to them. Perhaps somewhat surprisingly, in wake of ClimateGate, almost 50% reported that physical risk would affect their business in the next 10 years, meaning that for many, climate change is a near-term risk. But despite the fact that the majority of risk managers reported that climate change posed some risk to their firm in the near term, we found significant unevenness between firms in their response to manage these risks. Around 24%, slightly less than a quarter, reported that senior management was tasked with tracking and managing these risks. Many from heavy emitting industry, from health and medical and financial services, as well as insurance. But just as many, and even slightly higher, reported that no one was responsible for managing these risks, including risk managers who had reported that their firm was highly likely to experience regulatory or legal risk, including from heavy emitting industries, including oil and gas. In fact, more people reported that their marketing division was responsible for communicating the risks associated with climate change than their legal counsel, even though around a quarter of respondents reported that their business was likely to face legal risk in the next 2 years' time. While many risk managers who perceived their organization as being somehow exposed to climate risk did express interest in insurance products or risk consultation services as a way of helping them to manage the risks brought by climate change, and that included products as varied as property coverage for low-carbon energy sources or specialty drought coverage. An equally important result of the survey was that many risk managers who perceived regulatory or legal risks as being near-term and highly likely were either unsure of the adequacy of their coverage for liabilities or certain that their liability coverage was inadequate to guard their directors and officers against liability claims for mismanaging greenhouse gas emissions, or to guard them against tort claims for historic greenhouse gas emissions. So while risk managers from a variety of industries recognize climate risk as posing a near-term risk to their business, for that risk awareness to translate into risk management, they need to play a more active role in their organizations to help integrate climate risk into decision-making from senior management to facilities planning to legal counsel. And while this survey indicates that risk managers do believe that insurance can help them manage the risks associated with climate change, insurers and insurance brokers and risk managers need to improve communication around present-day adequacy of coverage and improve communication around the ways that insurance might be able to help firms manage risks as they evolve. Thank you.
Thank you very much, Charlene. And at this point, we'd like to go to questions.